Apple is one of the richest companies on the planet.
Today, Apple is going to reinvent the phone.
It's hard to imagine life without Apple.
Woz and I started Apple in my parents' garage when I was 20.
And Apple.
Apple has a plan.
We're just not making products to sell.
Here it is.
But it's paying way less in taxes than you would expect. This is a company worth over $3 trillion, pulling in $95 billion in profit, just profit last year. But their tax bill is shockingly low. So how do they do it? Spoiler alert, it's not just about clever accountants. Apple has mastered the art of global tax avoidance, using loopholes, international laws, and even some strategies that sound like a menu item. It's called the double Irish with a Dutch sandwich.
And it has turned out insanely great.
I'm gonna dive into how Apple became the undisputed king of tax strategy.
Apple may be trying to make up ground on AI.
To that warning from the FBI to iPhone.
Tax avoidance, pure and simple.
First, let's set the stage. Apple is a cash machine. More than half of its revenue comes from this phone. The rest comes from MacBooks, iPads, and services like the App Store, iCloud, and Apple Music. In 2023, they pulled in $394 billion in revenue and ended the year with $95 billion in pure profit. To put that in perspective, Apple's annual profit is more than the GDP of more than 100 countries on this planet, including Croatia and Luxembourg. Now, here's the kicker. Under US tax law, Apple should be paying 21% on those profits, but its effective tax rate, it's closer to 15%. And in some years, it's dipped even lower than that. Now, that might not sound like much, but on billions of dollars, it adds up fast. For every percentage point Apple saves, that's another $1 billion staying in their bank account.
That's our North Star.
Here's the trick. Most of Apple's revenue isn't actually made in the US. In fact, over 60% of their income comes from international markets like Europe, China, and Japan. And this is where things get interesting. Instead of bringing that cash back to the US and paying full taxes on it, Apple parks it overseas. Now, before the 2017 Tax Cuts and Jobs Act, US companies had to pay a whopping 35% tax rate on any profits brought back home. So Apple found a workaround. By keeping the money abroad, they could avoid paying US taxes entirely. At one point, Apple had over $250 billion sitting in offshore accounts. That's more than the foreign reserves of many countries.
I don't think of it as a loophole.
Tax expenditures.
Loosely called deduction.
Now we need to talk about what's called the double Irish with a Dutch sandwich. So yes, it sounds like something you would order at a deli, right?
Before you say anything, before you say one word, the usual.
But it's actually one of the most infamous tax avoidance schemes ever. Here's how it works. Step one, Apple sets up two companies in Ireland. The first one holds all the intellectual property. Think patents and trademarks for the iPhone and the MacBook. The second is a shell company. So step two is when Apple licenses its intellectual property to its Irish subsidiaries. So every time an iPhone is sold in Europe or Asia, those subsidiaries collect royalties. These profits are then funneled through a Dutch company and then sent to a tax haven like the Cayman Islands or Bermuda. The result? Apple pays virtually no taxes on billions of dollars in revenue. And in some years, their effective tax rate on those profits was as low as 0.005%. Now, to put that in perspective, for every $1 million Apple made, they paid just $50 in taxes. Okay, so of course governments are angry. In 2016, the European Union came after Apple with vengeance.
It is the biggest tax demand ever imposed by the European Union. The Irish government's been ordered to recover almost $15 billion of unpaid taxes from Apple.
They hit the company with a $14 billion tax bill, accusing them of receiving illegal state aid from Ireland. The EU argued that Apple had unfairly funneled profits through Ireland to avoid taxes. Okay, but hold up. Why Ireland exactly? Isn't London or even Paris the hub for Europe? Well, not exactly. See, it's Ireland which has been central to Apple's tax strategy for over 2 decades. The reason? Its corporate tax rate is incredibly low, just 12.5% compared to the 21% in the US, or even higher in many other countries. So it's because of this that Ireland became a global tax haven for big companies due to its tax laws and agreements that allow companies to legally minimize their tax bills. So In Apple's case, the company established its European headquarters in Ireland, setting up various subsidiaries to funnel profits from across Europe and beyond. And by doing this, Apple could report earnings in Ireland, where they paid a relatively low tax rate rather than in countries that they actually did a lot of business in, like the UK or France or Germany, where those tax rates are much higher. Okay, so the EU comes for Apple, but Apple fights back, appealing the decision and claiming that they followed all the rules. They even released a statement saying they were the, quote, largest taxpayer in the world. But the truth is, they were simply playing by the rules of a broken system. The US sees what Apple is doing here, and since it's not technically doing anything illegal, something here changes. So in 2017, the government passes the Tax Cuts and Jobs Act.
We had the largest tax cuts in our history.
President Trump has just signed a historic tax bill. This likely will affect everyone's taxes.
$3.2 trillion in tax cuts for American families.
This lowers the corporate tax rate from 35% to 21% and introduces a one-time tax on overseas profits. So Apple had to pay $38 billion on their offshore accounts. But even with that hit, they'd already saved tens of billions of dollars over the years.
There's lots of things that change, and I think that you sort of have to have a North Star.
So what did Apple do after that crackdown? Well, again, they adapted. While they've dialed back on some of their older tricks, they've still found new ways to minimize their tax bill. One of their favorite strategies now is stock buybacks. In 2022, Apple spent over $90 billion buying back its own shares. This not only boosts their stock price, but also reduces the amount of taxable income that they have to report. And let's not forget about R&D, research and development credits. Apple invests heavily in innovation. Think new chips, AI, and augmented reality. By doing so, they qualify for significant tax breaks, shaving even more off their bill. And let's be real, with the iPhone basically not changing every year and the Apple Car project shutting down, it seems that they don't have much to show for that innovation. But hey, at least that money didn't go to the government, because at the end of the day, Apple isn't doing anything illegal. They're simply taking advantage of a global tax system that hasn't kept up with the digital age. But here's the big question. Should they be allowed to? While Apple saves billions, governments around the world miss out on tax revenue that could be used for infrastructure, healthcare, and education. Today, governments around the world are tired of losing billions in tax revenues to corporate loopholes, and they're finally teaming up to fight back. In 2021, over 140 countries, including the US, signed on a historic agreement led by the OECD, which is the Organization for Economic Cooperation and Development. The goal here: stop massive corporations like Apple, Google, and Amazon from gaming the system. This plan has two main pillars. First, a global minimum tax of 15%. No matter where a company parks its profits, whether it's Ireland or the Cayman Islands, they'll have to pay at least 15% in taxes. This could bring in an extra $150 billion in revenue in global tax revenue. For context, that's enough to fund the entire annual budget of a country like Denmark. The second pillar targets where companies actually pay taxes. So right now, companies can make billions in a country, but barely pay taxes because their profits are reported elsewhere. So the new rules would force companies to pay taxes where they actually do business. So if Apple sells iPhones in Germany, a chunk of their profit would be taxed in Germany, even if the money flows through Ireland or Bermuda. The EU is also stepping up. Countries like France have introduced digital services taxes specifically aimed at tech giants. Even the US has been more aggressive post-2017, with laws designed to claw back offshore profits and tighten tax reporting for multinational companies. But here's the kicker. Enforcement is still tricky. Big companies have armies of lawyers and accountants to find new loopholes. For instance, some firms are already exploring new tax havens or creative reinvestment strategies to skirt the global minimum. The bottom line, governments are finally waking up to the tax avoidance game, and they're starting to play hardball. But as history shows, corporations will always look for the next advantage. And this battle is far from over. And the question remains, can governments keep up, or will companies like Apple always stay one step ahead of the game? And hey, isn't that just capitalism? Let me know in the comments what you think about Apple's tax strategies. Genius or just plain unfair? While you're at it, make sure you subscribe to this channel so you don't miss the next video.
Thank you very much.